Okay, let's just forget the price charts for a minute. Seriously, because the future of crypto here in the US might not be decided by traders at all, but by lawmakers. We're going to break down something called the Clarity Act. It's a proposed bill that could finally end the regulatory chaos and answer the one critical question that's been holding this whole industry back for years.
You see, at the absolute heart of a decade of confusion is this one single question. Is something like Bitcoin a commodity, like gold, or is it a security, more like a share of stock in a company? And look, the answer isn't just for academics. It determines who regulates it, what rules it has to follow, and pretty much its entire role in the financial system. And this really shows you the problem perfectly. For years, America's two most powerful financial regulators have been locked in this constant tug of war. You've got the SEC, which handles the stock market, arguing that most digital assets are securities. And then you have the CFTC, which regulates commodities, saying, nope, things like Bitcoin are commodities. And this has just created a total nightmare of ambiguity. And let's be super clear here. This isn't just some debate club topic. This regulatory gray area, it's the single biggest reason why the big money players, we're talking pension funds, endowments, major corporations, have been so hesitant to jump in. Without clear rules of the road, the risk has just been way too high for them.
Okay, so this is where the Clarity Act comes into the picture. It's been proposed in the U.S. House, and its whole goal is to just cut through all that confusion and create a clear legal framework. It introduces a brand new standard to try and end this debate once and for all.
So the Act brings this brand new legal idea to the table, the mature blockchain system. And this definition is pulled right from the bill's text. It's not about how old a project is or how much it's worth. No, it's about one thing and one thing only: decentralization. Is the network truly run by its users, or is there some central group somewhere pulling all the strings?
And the logic here is actually incredibly simple. The Act basically proposes a test. Does a blockchain system meet the criteria for being mature? If the answer is yes, then its asset is officially a digital commodity, and it falls under the CFTC. If the answer is no, well, then it's a digital asset security, and it has to deal with all the strict rules of the SEC. Simple as that.
Now, what's so interesting here is that this is the actual checklist. These are the specific legal hurdles a project has to clear. Is it controlled by a single group? Is the governance really spread out? Can someone just decide to censor transactions? Is the code open and transparent for everyone to see? It's a really tough framework, and it's designed to separate the truly decentralized networks from projects that are, let's be honest, basically just companies using a blockchain.
So, with that framework in mind, let's run the most important digital asset through it. How does Bitcoin itself stack up against this new legal litmus test?
Let's just start with the most obvious question, right? Who's in charge of Bitcoin? Is there a CEO you can call up, a headquarters you can go visit, a board of directors making all the big decisions?
The answer, of course, is a big no. Bitcoin is the classic example of a network without a central boss. Its creator vanished over a decade ago, leaving the whole thing in the hands of this global, distributed community of developers, miners, and users. So yeah, it easily passes this core test. But the Clarity Act gets even more specific, which is fascinating. One of its key rules for being mature is that no single issuer or insider group can own more than 20% of the total supply. Now, this is a huge hurdle for a lot of newer projects that gave tons of tokens to their founders. But for Bitcoin, which had no pre-mine and was spread out far and wide from day one, this is another easy pass.
And the list just goes on. Anyone can participate, no single person can block your transaction, the entire history is public for anyone to audit, and any big changes to the rules require this massive consensus from the whole community. Bitcoin doesn't just pass the test, it's practically the poster child for what a mature blockchain system is supposed to look like.
So, what does this all mean for the broader market? Well, the key thing to understand is that the Clarity Act wouldn't be a rising tide that lifts all boats. Nope. It would act more like a great filter, fundamentally changing the digital asset landscape here in the US.
This slide really lays out the new divide pretty clearly. In one corner, you'd have the potential winners. Bitcoin, with a clear path to being treated like a commodity, US exchanges who could finally operate with confidence, and any other truly decentralized projects that can pass that maturity test. And in the other corner, you have the projects facing some serious headwinds, things controlled by a central foundation, projects with a ton of insider ownership, and smaller platforms that just can't afford the new compliance.
And at the end of the day, this whole sorting process gives those big institutions the one thing they've been begging for: clarity.
It creates a well-defined, government-approved category of assets, with Bitcoin leading the charge, that big money can finally, confidently engage with.
But hold on, because there's another, equally huge part of this bill. It's kind of buried in the text, but it addresses a totally different, though related, debate about the future of money itself.
That's right. The same piece of legislation that could provide clarity for digital commodities also has a section with a pretty loud title, the Anti-CBDC Surveillance State Act, and it's aimed squarely at the idea of a government-issued digital dollar.
And the language here could not be more direct. I mean, look at this quote right from the bill. It's totally unambiguous. It would prohibit the U.S. Federal Reserve from issuing a central bank digital currency, a CBDC, directly to you and me. It essentially slams the door on the path to a retail government-run digital dollar.
So think about what's happening here. By creating a clear regulatory path for a private, decentralized asset like Bitcoin, while at the very same time blocking the path for a state-controlled digital currency, the Clarity Act basically frames the future of money as a fundamental choice. Are we going with open, permissionless networks, or are we going with centralized, government-run systems?
And really, that's the bottom line. While who knows if this bill will ever pass, its blueprint is pretty revolutionary. It forces the conversation away from just short-term price swings and focuses it on the long-term legal foundation for digital assets. And in that foundation, Bitcoin's role as a clear, regulated digital commodity would finally be cemented into the U.S. system.